Welcome to another Wednesday webinar. I am Nate here with NuView Trust Company, and I have a special guest that I want to start off with. We have sponsors that help us make these webinars successful, and we really appreciate when they take time to share our content, get more people, get more investors involved. And I have a personal relationship with Real Estate IQ and Becky specifically, because they are housed where I just moved from, which is Houston, Texas, but their product spreads outside of the Texas market and even into the Florida market, which I love. And I'm going to have her talk about what they provide you as a real estate investor, both a real estate investor using a self-directed IRA or not using a self-directed IRA. Becky, can you hear me?
Yes, Nate, thank you so much.
Go ahead and take it away.
All right. As Nate said, I'm with Real Estate IQ, and we are a lead generation and data analytics company for investors. And so our main product that we have in Florida, also currently in Georgia, Utah, and Texas, is our off-market leads. So if you're looking for those motivated and distressed sellers for your real estate deals, we give you those lists. Now the lists do vary by location. If you go to our website, you can see exactly what's available in your area. But some of the ones that we offer are pre-foreclosures, appointment of substitute trustee in Texas, which is sort of a pre-foreclosure, as is Liz Pendants in Florida. We also have probate and heirship, eviction notifications, loan modifications, code violations, delinquent taxes, tax sale, and divorce lists. And if you see these ones with the little asterisks by them, those come in our premium package with the skip tracing information already attached. So phone numbers, email addresses of those motivated sellers already there when you get the list. And we update most of those lists every day, Monday through Friday. So it's always the freshest, most accurate data. We do also have in Texas, and coming soon to Utah and hopefully Florida a little bit later, our Fast CMA to let you run comps on a property. So you can do that for any property in Texas, or most of Texas. We also have a county data finder that you can pull a list of absentee owners, for example. And Mls Deal Finder lets you search the MLS for good deals. And again, those are just currently in Texas, but we'll be expanding those to other places as well. We also have a really cool new product, which is our CRM integration. You can get your leads filtered directly into the CRM the way you want them. And we will do all the setup work for you to connect that with something like Twilio if you want to send out texts to those people, or get your outbound or inbound calls directly through the CRM so you can see all that property information. So it's a really cool thing that you can get anywhere. So check that out. There's our web address. And if you have any questions, you'd like to see how our service works, or you want a promo code for a discount to sign up, there's my contact information right there. So I'd love to hear from you.
Awesome. And I will say this, of course, you know, I am not privy to promote or endorse any products or services, but I will tell you that in my experience and hearing from other investors who have Real Estate IQ accounts or use their services, is that it is top notch, probably the best out there when you're looking for, you know, hot off market real estate deals with motivated sellers is the key word that she kind of mentioned there several times, especially in the crazy market that we've got going on right now. It is really good to, you know, find those motivated sellers before anybody else finds them. And they're going to be expanding their products to Florida. They already have products for Florida if you're investing in Florida, and they're going to be expanding on that. So jump on that quick. Becky, you're going to leave your information in the chat as well so they can contact you, I believe.
I will.
Yep. Awesome. Awesome. So thank you. Yeah. Thank you, Becky. Thank you, Real Estate IQ, for sponsoring today. And we'll definitely have you guys on future segments. So thanks again. So back to the program. I'm excited today because what we're going to do today is kind of do a recap of what we learned in May through our webinar Wednesdays here from NuView Trust Company. And I first will tell you, thank you to everybody who has watched live. Those who have watched the recording, we are the number one ranked self-directed IRA educational webinar out there in the industry right now. We got tens of thousands of views just in this month alone. And we thought, what better way to kind of give back to those people who watched in May, but to give kind of a recap of what we learned in May, not only in the webinars themselves, but even outside of the webinars. What are the things going on in the industry that us as investors need to know, especially when it's involving our retirement investments and our retirement assets. So let's just jump into it. Let's look at retirement as a whole. I always want to remind people that retirement accounts are the largest source of Americans' wealth. More people have money in their retirement accounts than they do their bank accounts. But the interesting thing is, most people don't pay much attention to their retirement accounts or take time to really decide what they want to invest in. Most people just invest in stocks and bonds and mutual funds, and that's fine. But remember that this is how you build your nest egg. And I think it's really important, regardless of what age you are, if you're in your 30s or your 70s, as to what you can use your IRA to invest in and how you can really create tax-free wealth and tax-free generational wealth using self-directed IRAs. So just a look, airplane view with retirement accounts is there's $30 trillion in these puppies, and IRAs now make up the largest source of American retirement. It used to be 401ks, but with job transition and people rolling, old 401ks into IRAs are now make up a third of American retirement, and that's $10 trillion. So a lot of money that we're talking about. And just an airplane view of the markets when you look back, and this information was taken from last week, so last Friday. If we're looking at the stock market, again, I'm not a financial advisor. We're just looking at things. Airplane view it's relatively unchanged, right? There were some ups and downs depending on what industry that you're invested in, but the start of Monday last week to the end of Friday, it was relatively about the same. So not much change there in the stock market. Different if we're talking about crypto, though. If you're following crypto, the volatility in that. And again, I'm not here to say crypto's good, bad, or otherwise, but I will say crypto's definitely volatile, down 35% just in 1 week. You don't see that in the stock market, and you definitely don't see that in real estate, especially right now. Again, not calling it a bad investment. I know it's up early this week, but when you're talking about what you're going to invest your retirement account in, you probably don't want to invest large sums of your retirement into something that's so volatile, unless you're playing with small amounts of money. Most people who have money saved up from their earnings over several years don't want to invest in something that's so volatile. But you might throw a couple $1,000s here or there at crypto, especially when it's down, after it's down 35% in a week. So again, I'm not here to tell you whether you should or you shouldn't invest in crypto. I'm just here to kind of give you the state of the union as to where it's at. And I will tell you this, that NuView Trust Company is one of the only custodians of IRA accounts that not only offers self-directed IRAs that hold alternative assets, we also hold cryptocurrency. And we're actually getting set up where we'll be set up probably by the end of this week that allow you to trade on a platform directly from your self-directed IRA here at NuView without having to set up a checkbook control IRA LLC or anything crazy like that. So that is definitely on the horizon. So even though I, kind of mentioned that Bitcoin's down 35% last week, that doesn't mean that it's not a good buy. And we have the option for you to use your IRA here at NuView to buy Bitcoin. We also have an opportunity to invest in traditional stock. So I don't know many other self-directed custodians that allow you to invest in alternative assets, cryptocurrency, and traditional stock all under one roof. So that's something that's very, very unique in the industry. And if you're interested in setting up an account, again, wait till the end. I've got a little promo for you guys if you want to invest in all these things. And the reason why we do that at NuView is because if you want true diversity in your portfolio, you got to work with a custodian that allows you to have true diversity. So NuView accounts allow you to invest in all three of the things, or all two of the things that I mentioned, and including tangible assets like real estate. Depending on where you're at, real estate's pretty stable for the most part. In some areas, it's even, you're having bidding wars. I know that. I know Texas is about the same. Florida, we're experiencing really, really competitive sales prices and things like that. It's definitely a seller's market right now. I pulled some data just from Real Wealth, which is giving kind of some basic information on, here's Orlando, for instance. And if you go to Real Wealth, they've got some other, data points that you can pull from different states. And this is just a kind of an overview of what we're seeing through the year. So they don't do it on a month by month, but it's a kind of a ongoing year analysis of what we're seeing here in the Orlando market. Average home price about $215,000, which is 15% below the national average, which is good. You can afford very, very affordable housing here in Florida. And everything is really pretty stable when it comes to values. Now, there's all this doomsday scenario about, are we going to hit a housing bubble and all that? We'll see. We'll see. But right now, we're seeing a lot of stability in the housing market. And if you look at different data points, you can see that Florida is still ranked #1 for the best places to retire on. So cost of living and things like that. And again, not just throwing Florida out there. This is just kind of some information to kind of see where you live, how, retirement living is viewed in your state. But we're talking about retirement investments. So investing in the stock market, investing in Bitcoin, investing in alternative assets are all things that you can do here at NuView. And when you're looking at real estate, this is kind of why there's such a frenzy in the housing market, and why you're seeing high amounts of competition with people bidding on prices and bidding over what the asking price is in most cases. There's just no inventory. Okay, there's a 3-year history of mortgage rates. We know why people are buying is because they can get money for cheap. But here's, in the same token, here's what the inventory looks like up to through April. So inventory is way down. Obviously, that has to do with COVID and a lot of other things, right? Cost of lumber through the roof. So we've got very, very low inventory, which makes it a seller's market. And that's just something to keep in mind when you are looking to buy real estate in your IRA. Another thing that you want to think about, and this more goes to the other person that might not be using an IRA, but if you're a real estate investors, put your thinking hat caps on for a second. Are you losing bids right now because you're getting outbid by other buyers? When the inventory is low and you have to put bids on properties, you have to be very, very competitive in your bid. A lot of times you have to have your best foot forward and show that your buyer, or whoever you're representing, if you're a real estate agent as well, is that you can close on this property. And a lot of times putting your best foot forward is showing that you've got cash to bring. Cash buyers are king in a market where inventory is low. And one thing that I always like to stress to people is that self-directed IRAs can invest in all sorts of things. But if you don't have a self-directed IRA, one of the other things you can use them for is use other people's IRAs to fund your home purchases, your investments as a real estate investor. Real estate investors should be thinking about how they can use other people's retirement accounts instead of just thinking how they can borrow money from a bank. Okay. If you walk in to a seller's house and you want to buy that property and you are saying you've got financing lined up and it's going to be a 30, 45 day close and you still got to go through underwriting, that does not make you a strong buyer. If you've got your own cash, that makes you a strong buyer. But if you have IRA lenders lined up, and trust me, there are lots of people that have money sitting in their IRA that would love to lend secured by real estate if the deal's right, that makes you a cash buyer. I see it every day in our NuView operations team upstairs. When they're funding notes secured by real estate through people's IRAs, it's taken 24 to 48 hours to get that cash from IRA to title company, IRA to real estate attorney's office. So if you are missing out on deals because you are waiting on bank financing or waiting for a seller to approve your your bid with bank financing, maybe you're digging in the wrong bucket. Maybe you should start networking with some IRA lenders and having some IRA lenders as your capital source, especially in a market where we see inventories are so low. But again, makes prices high. When the inventory is low, demand is high, and we're seeing prices continue to go up. So when we're talking about self-directed IRAs, as we circle back and talk about self-directed IRAs, remember self-directed IRAs, as we learned this month, can invest in all sorts of alternative investments and traditional investments. When you're talking about options or options in your IRA, remember the IRS does not tell us what we are allowed to invest in. You can invest in anything you can hold title to. Anything you could draw a purchase contract for can be owned in your IRA, with the exception of two things: life insurance contracts and collectibles. That's it. So where do we see most people invest their IRAs when we're talking about in alternative assets? When we see at NuView is we see a lot of clients take their retirement accounts and buy investment property, okay? Fee simple real estate, commercial property, land, multifamily property. Again, great investments for a retirement account because those investments are tangible, right? You could drive by, you could touch it, you can feel it. They often offer multiple streams of income, whether it's through rents, through down payments, if you're owner financing, or even doing something creative where your IRA is buying property on terms, right? Buying property from somebody else who's going to sell or finance it to your IRA because you might not have a large IRA. Coming up in the next month, I'm going to have, or next 2 months, I will say, we're going to have 2 presentations about IRAs borrowing money from banks. So an IRA can borrow money from certain banks to leverage themselves to either buy more property or just use your IRA as a down payment and borrow money from a bank. Again, it's a great, great way to buy tangible real estate with having a small IRA or just, using a portion of your IRA as a down payment. But most people actually choose to be more passive with their IRAs. Again, it doesn't make it wrong or right. It really just depends on what you're knowledgeable about and what your comfort level is. But most of our clients, and I would say most of the self-directed IRA clients out there at any company, invest passively through secured promissory notes. That's what I do. I like to just loan to real estate investors. I don't have to deal with toilets and tenants. My money's secured by the property, just like a bank would secure their money by a property if you borrowed money from them. And I know exactly what I'm getting. I don't have to worry about the swings in the stock market. I just have to worry about my borrower making payments to me. But if I do my due diligence properly and I'm working with the right people with good track records, I don't really have to worry that much about them missing payments. They're usually pretty good about making payments if they're a good real estate investor. But it eliminates me from having to do all the work. I don't have to deal with toilets. I don't have to deal with tenants. I don't have to deal with permits. I don't have to deal with any of that. I just have to deal with finding the person that I want to loan money to, securing it by the property that I feel comfortable with. And there's a lot of wonderful things that happen in that. Not only do I get above average return on my interest payments from my borrower, but I'm doing a social good too by helping a real estate investor take an eyesore out of the neighborhood and turn it into a nice, pretty home. And in the process, using contractors who are using subcontractors, putting money back into our local businesses, all through my money. I really like that type of investment strategy, is investing in notes. But we also see a lot of people choose to invest passively into other people's real estate deals, whether that's through an entity like an LLC, or someone's raising money through a partnership to buy a commercial property, a joint venture that might be, buying a property. There's a lot of different ways that you can use your retirement funds to invest passively into real estate deals that other people find and other people work on. And there's just much more opportunity out there outside of those 3. But remember, you can choose what you want your IRA invested in. The question is, what are you knowledgeable about? And how diversified do you want to be? And I just love the self-directed IRA for the fact that it allows you to diversify in these asset classes and not just have everything in stocks or Bitcoin or otherwise. So when we talk about types of accounts, we touched on this in the very first webinar that we did in May, which is what is a self-directed IRA and why would you want one? I like to always remind even clients this is remember that we have 7 accounts here at NuView. A lot of clients, not picking on anybody, but I see have one account. They might have a traditional IRA or they might just have a Roth IRA. But as I talk to them, I find out they have kids or they have grandkids or, they have health expenses that they're paying out of their back pocket with after tax money. And I think, gosh, there's so many accounts here at NuView that people don't take advantage of that I always feel like I need to have this up as a reminder to say, look, when you think of the IRAs that we have here at NuView, they all have tax advantages that we don't have as individuals. So your traditional and Roth IRA, at a bare minimum, you get to defer all of your profit as you invest through a traditional IRA. If you invest through a Roth IRA, it gets even better. If you're somebody that likes to take small amounts of money and make them larger, what better way to do it than do it completely tax-free? And that's what a Roth IRA enables you to do. The Roth IRA is one of the greatest things our government's ever given to us. They haven't given us much, people would say, but the Roth IRA is just a phenomenal wealth building tool that allow you to accumulate assets that can grow completely tax-free. So if you can imagine accumulating assets, I'll give you an example. Just off the top of my head, I can think of a client that bought 4 or 5 properties now, all on terms, okay? All bought property with this Roth IRA subject to the underlying financing that was already on the property. Now, the reason he did this is because he only had to come up with about $10,000 per property to give to the seller in order to take over the payments that these houses, the financing that was already on these properties. But the strategy is once title is drawn up in the name of the Roth IRA, you put a renter in that house and the renter pays off the existing loan going forward, and fast forward in time, 20 years down the road, you've got 4 or 5 properties that are owned free and clear in your Roth IRA. And by that time, if you're say 59 and a half, every time a renter pays rent on that property, you could take that tax-free and penalty-free out to yourself for the rest of your life. You're off the grid. You don't owe Uncle Sam a dime after that. Think about the retirement you can live owning 4 or 5 rental properties that are rented, and you have rents coming in each and every month that you can live off of tax-free. And all the appreciation that you get if you want to buy and sell property, no capital gains tax in any of these accounts as you buy and sell real estate. It's a phenomenal way to retire. And then if you're thinking about generational wealth, you want to think, well, what happens to me when I die? If you die and you have a bunch of assets in a traditional IRA, well, you might have been planning to pay the taxes on your traditional IRA in a lower tax bracket. But when you die, the people that pay the taxes are now your beneficiaries. And if your beneficiaries are still in their working years, they're just adding more income that they have to add when they take distributions out of their inherited traditional IRA. Why not give them an inherited Roth IRA that allows them to take distributions completely tax-free from those same assets that you were taking tax-free distributions on? But an inherited Roth IRA gets to live for another at least 10 years with your beneficiaries as a tax-free bucket of money. So again, awesome opportunity if you can really understand how the Roth IRA works. It's almost shocking that I think everybody should have a Roth IRA, and your kids should have Roth IRAs. If your kids are working, all you need is earned income in order to have a Roth IRA. You don't need to be a certain age. I know a 4-year-old that had a $75,000 Roth IRA. I'll save that story for a future presentation, but Roth IRAs are amazing. All you need is earned income in order to make contributions to those. And then you have the employer plan. So if you're self-employed, you can make larger contributions and additional contributions to your SEP IRAs, your simple IRAs. We even have the mighty great solo 401k, which is a great vehicle for you to grow tax-free wealth in the self-directed manner. We have that here as well. And then you have your specialty plans, which would be your health savings account and your education savings account. And these are plans that, again, I think almost anybody can use to their benefit. But the difference between the specialty plans, that's much different than the personal employer plans, is that you don't have to wait until 59 and a half to use the money. You could use the profit made out of a health savings account or an education savings account You can use the profit tax-free the day you make the profit, provided that you're using it to pay for out-of-pocket health expenses for your family, you, spouse, and dependents, and the education savings account, out-of-pocket education expenses, qualified education expenses from pre-K through college, not just college. So if you're really using this idea of self-direction to its fullest capacity, what you really should be doing is you should be investing a Roth IRA for yourself, a Roth IRA for your spouse, any of your kids that have earned income, they should have Roth IRAs. If you're self-employed, you should be making large contributions to the employer plans. And if you have a high deductible health plan and the health savings account fits your needs as a family, you should be putting money in a health savings plan and education savings accounts for any of your kids or grandkids under the age of 18. When you start maximizing or partnering those accounts together, you find that you have a lot more money saved up or kept because you get Uncle Sam out of the equation with these accounts. So it's not just retirement plans we offer today plans if you're talking about the health savings account and the education savings account. So just again, real passionate about this. And I always want to remind people that there's 7 types of accounts that can be self-directed here at NuView. And again, that can be self-directed into real estate, promissory notes, Bitcoin, traditional stock. We offer it all here at NuView. Here's just a kind of a case study that I just put together, real life case study about a NuView client that actually took this advice and ran with it. They did a note. They had a real estate investor that they had met at one of the local RIAs here in Central Florida. The real estate investor needed $100,000 on a property that he couldn't get regular financing from a bank on. Reason being is this property was pretty beat up. I think it was $60,000 to buy it and $40,000 to rehab it. So you could probably imagine what this house looked like. But it was found through skip tracing and finding out that the owner of the property lived in Wisconsin. He inherited it, didn't have any interest in keeping up with the property. It just wasn't something that he really cared about. So obviously motivated seller at this point, the real estate investor struck up a deal to buy this property for $60,000 and anticipated that he needed about 40 to rehab it. The condition that the property was in prevented him from going to a conventional bank like Wells Fargo or Chase. They didn't have a loan program for him. Even if they did, they would have asked him for 30% down, tax returns, great FICO score, 10-year residency, no gaps, blood sample, firstborn. And then they might have given him the money in 30 to 45 days. So, but he didn't have that much time to buy a property that with such a motivated seller. He wanted to buy it like last week. He could have gone hard money, but hard money charges an arm and a leg. So he went to his local RIA and found a gentleman that had set up some NuView accounts that hadn't invested his money yet. When they struck up the deal, the IRA owners and the borrower came up with the terms. And the terms on the note was that the borrower was going to pay their IRAs 12% interest. That would be annual interest. The note would be a 1-year note with a balloon payment, which just means that the loan amount or the payments are amortized over 30 years to give the borrower freedom to make smaller payments. But the principal balance would be due after year 1. The reason why a lot of self-directed lenders like to do this, me included, is that for me, I don't want to be tied to somebody in a loan for 30 years. That's just not the type of investment that I'm trying to make. Plus, I'm not loaning to people who are buying houses to live in. I'm loaning to real estate investors who are buying properties and flipping them in a year or selling them, seller financing or something like to that effect. So most of the real estate investors don't need your money to buy an investment property and keep the money out there for much longer than a year or two. But you can always put in the note that there's an optional extension. And this is what they did. They said, as terms of the note, there'd be a 12% interest that's paid by the borrower on a monthly basis. It would be a 1-year note with a balloon payment and an optional extension after that year. So basically they can come to an agreement if the borrower's been making on-time payments and they want to keep those payments going for another year. The borrower might pay a point or two up front to keep keep that loan and extend it for a year. So, and what they did though, where the partnering comes in, the power in the partnering is They used the husband's Roth IRA that they had moved over from Fidelity. The wife had a Roth IRA as well that they moved over from Fidelity. And they had an HSA, a family HSA that they had from a previous job that was just in cash at Bank of America. It's interesting to know how much HSA funds are just sitting in cash uninvested because people just don't know what to invest it in. Well, here's a great opportunity. This is where you can see where you can make 12% on that money by partnering their HSA funds with their own Roth IRA, because you're not going to find many people that want to borrow $15,000, but you're going to find a lot of people that want to borrow $100,000 or could borrow $100,000. So the power in the partnering you get more buying power by partnering accounts together. Now, once they draft this note, they make sure that their IRAs are listed as the lender. So if it's an IRA at NuView, it would read NuView Trust Company, FBO, the client's name and their account number. Really easy stuff. The borrower signs the note. Okay. And then once we get a copy of that note here at NuView and the clients fill out some basic paperwork, we send the money to the title company or attorney's office wherever they're closing. And that can all happen within 24 to 48 hours. So was the borrower happy in this deal to get $100,000 in 48 hours? Yes, it just took them the time of drafting the note and coming to an agreement on terms. Were the clients happy that they got their money out there secured by real estate, making interest at 12% guaranteed each month? And if the borrower doesn't make a payment, what do they have to fall back on? The house, right? Not that they want the house, but they have the house as security in the event that the borrower doesn't pay. And when the borrower pays, it's really easy. It's almost just like sending a payment to Bank of America. Instead, you're just sending the interest payment to NuView. And you just send one check and NuView splits the check pro rata based on the amount that each account has put in. So in this scenario, with the husband using his Roth, the wife using her Roth, and then the HSA, because of how those grow, all of the interest profit gained back to those accounts are completely tax-free. And there's a benefit to keeping the profit in the Roth IRAs until they're 59 and a half, sure, like any other retirement account. But the HSA, the interest going back to the HSA, they can take it out immediately to pay for any out-of-pocket health expenses that their insurance doesn't cover. That would be doctor's visits, co-pays, dental work, prescription, holistic medicine. There's a whole list of things that most Americans pay for when it comes to health expenses that they're paying out of their back pocket, which is the wrong place to pay it. Pay it with tax-free dollars, and you'll find that you can consume more goods with the same amount of profit by getting Uncle Sam out of the equation. So the other thing is that you can compound your interest when you do short-term notes like this. A one-year note allows you to collect all your principal back after the first year, plus the 12% that they gain. And if all things work out well and that real estate investor has another deal, well, then you can loan not only the principal that you got back, but you can loan the interest as well. And if you look at any chart, look at the effects of compound interest when you can compound it on an annual basis. It's tremendous how much your IRA can grow exponentially by just using these common tricks. Okay? So, and the other thing that I want to mention too is, capital gains. There's always conversations about capital gains. Even when you're investing in crypto, guys, I hate to tell you, you have to pay capital gains tax if you're investing in crypto outside of your IRA. Better place to invest in crypto inside of an IRA where you don't have to pay capital gains tax. And food for thought, this is not a political statement at all, but keep in mind some of the plans that are out there. The American Families Plan right now is on the table. And if passed as is in the American Families Plan, we might see a raise of capital gains tax. Long-term capital gains tax might raise from 23.8% to 43.4% nationwide. And that doesn't include state tax. So again, it's not about whether you would agree or disagree with that plan. It's about what are you going to do to prevent yourself from having to pay 43.4% in long-term capital gains tax. California, look it up. You guys might be paying 56.7% capital gains tax if a plan like that passes as is. Again, not trying to get political, just trying to give you some food for thought to say, how do I bypass capital gains regardless of what percent it's at? use a self-directed IRA, use a self-directed Roth, use a self-directed HSA. These are plans that you will never pay capital gains tax in if you start using them to buy and sell investments. So powerful, powerful stuff there. Right, Maggie?
Right.
All right. So what are the steps? So if you missed this part of the class, we're going to talk a lot about this. I'm not going to spend too much time on this, but the steps in actually setting up a self-directed IRA and actually investing in these things is really simple. First, if you want to invest in things like promissory notes, partial promissory notes, real estate, investments into private equity, Bitcoin, all this stuff, you've got to set up an account that allows you to hold those types of assets. And Fidelity, Charles Schwab, TD Ameritrade, they won't allow you to do it. In most cases, you would have to have an account with a company like NuView. Now, most of our clients, I will tell you, have NuView IRAs, but they still keep their brokerage accounts open. I actually love that, because when you have IRAs at multiple custodians that hold different assets, then it gives you true diversity. And again, even if you're not a real estate investor, you might want to look at how exposed is your retirement portfolio if it's just invested in stocks which are not collateralized by anything. If we get big swings in the market, all stocks can go down. Now, real estate can go up and down too, but again, things like real estate or notes secured by real estate, it's tangible. And real estate is the largest segment of our economy. It's not going anywhere. It's not an industry. No offense, Bitcoin. I don't know if Bitcoin is going to be around forever. I know I'm going to have some Bitcoin haters saying, oh, well, how the technology works. I don't want to hear it. What I'm saying is real estate will always be here. It's not going anywhere. As long as there's living, breathing humans on this planet, there's going to be a need for shelter and homes. So there's always going to be a market there for people to buy homes and people that need financing to buy homes. So if you're looking for longevity and stability, it's hard to argue, real estate or notes secured by real estate is a great investment. But again, you got to open an account at NuView in order to hold those types of investments if you choose to. Once you open an account with us, and all opening an account takes is just filling out an application, giving us a copy of your ID. It's really simple. Once you've got that account established or accounts established, you fund it by either making a contribution, just like you make a contribution to any other IRA. You can transfer money from one of your other IRAs or other HSAs. It can be a full or a partial transfer. Transfers usually take a couple business days, depending on the custodian that you have it parked at now. Or you can just roll money over from an old 401k or an old 403b, TRS, TSP, an old employer plan that you have separation of service from. You can roll those funds into a self-directed IRA that allows you to invest in all these alternative assets I've mentioned. Number 3 is the big part with self-directed. The self is you. You choose your own investments. That comes with a great responsibility, but also comes with great flexibility too. So the flexibility is you get to invest in alternative assets. The responsibility is you must understand the investment, because we're not going to tell you whether your investment's good or bad. We're just going to say, yes, we'll fund it. And we'll fund anything that's not a prohibited investment, which again, leaves it open to a lot of different things. But when it comes to locating your investment, you must also remember to do your own due diligence on the investment as well. So hopefully these webinars help you kind of, dig through some of the unknown a little bit. But, as a self-directed IRA company, we can't tell you how to do due diligence or what you should do, but hopefully some of the guests that we've had on here and going forward will help you analyze deals and things like that. Once you've located your investment, though, you've got the account open, you've got it set, funded, and you locate the investment, our operations team will walk you through the investment step by step. It's really easy. It's going to be different for you the first time through, but once you get through it one time, it's like riding a bike. You just know that you have to give us our bi-direction form, which gives us the authority to make the investment on your behalf. And then you give us copies of the agreements, like a promissory note, a purchase agreement. There's always going to be some sort of agreement with that investment. And we just need to make sure that the IRA is properly listed on there. Once we get those items, we can fund the investment from your NuView account. And once we fund it, your IRA now owns that piece of real estate or owns that note or owns that investment into a private company and so forth. So really easy stuff. And I always say, if you've got questions, email info@nuviewtrust.com. Want to go back to some of the speakers we had and thank them for being on the podcast or being on the webinar, I would say. Keith Baker, good friend of mine out in Texas. He is the host of the Private Lender podcast. He's also an investor both inside and outside of his self-directed IRA. So he lends out of his self-directed IRA. He's been a lender for a lot of years. He came on the show. He shared with us his investments that went bad, which is great. You learn a lot from mistakes other investors have made. So he's done a lot of good deals, but he decided to share the ones that he didn't do so well on as a means of educating clients, potential self-directed IRA clients, to stay out of the things that he got himself into. But some of the main points that we pull from Keith Baker's presentation is that if you're going to be a lender, trust, but always verify the information that you get from your borrowers. Verify comps. You've got Real Estate IQ. Becky gave you a great resource if you want to, look up data and things like that, or just find, hot deals. There's all sorts of places that you can find and verify information, but always verify. That's part of your due diligence, even when you are a lender. Keith mentioned he likes the borrowers to have some sort of skin in the game at closing, whether they're putting a small amount down to cover some closing costs or whatnot. He doesn't like to loan 100% of all costs because he feels like he's got a little bit of a safety net when the borrower has some skin in the game. And I would agree. The more skin in the game your borrower has, the less likely they're going to default or walk away from any payment obligations. Some of the other things that he mentioned to always make sure you do as a lender, even with your self-directed IRA, is no Starbucks closings. Close professionally like banks do. Close at a title company. Make sure the underlying asset has clear title if your note's going to be secured by that property. Use a lender's attorney, not the borrower's attorney, right? You want your interests as the lender protected. So you want to make sure you have an attorney draft the note, since that is the agreement to pay your IRA or otherwise. So use a lender's attorney to draft your notes. Don't use templates. And as Keith said, don't recycle documents. Don't use the same note template that you used for borrower 1 all the way through borrower 30. Every deal is different. Every property is different. So don't recycle documents. Use new notes for each note you do. And again, that's not coming from me. That's coming from Keith. I will tell you this too. Will a new drafting of a note with your attorney cost money? 100%. Yeah, it should cost money. You should be using a good attorney to draft your notes. Who should be paying for that expense? Not you, the lender. The borrower should pay that. You should be passing those expenses on to your borrower. The reason being is because if a borrower goes to Bank of America, they have fees. If a borrower goes to a hard money lending company, they have fees. So if you are going to incur fees lending your IRA money out, and that could be NuView fees or your attorney fees for drafting the note, I always pass those fees down to my borrower. And guess what? My borrowers are happy to pay them, because those fees, the small amount of fees I get charged at NuView and the couple $100 I have to pay my attorney to draft the note is far, far less than any fees that they pay, even with a conventional bank that typically charges about 3% of the loan amount in fees. So again, you don't shy away from fees. Make sure you're protected. Make sure you're using a lender's attorney, and pass those fees down to your borrower. And borrowers smile when you pay those fees, because you're getting somebody to loan their retirement, their nest egg, to you, to allow you to buy property as a cash buyer. And typically it doesn't affect your credit. So again, you should be happy to pay these fees for your lender, because happy lenders will loan you more money in the future on future deals. And then another thing Keith brought up that was very, very important: if you're loaning to an investor that's using an entity to take title to the property, make sure you ask for a personal guarantee from the individual. Okay, because there is a little less security if you're lending to an entity. You don't want that entity dissolved and things go wrong there. Ask for a personal guarantee from the individual who manages that entity as kind of a precautionary thing. But great information. If you want to rewatch the webinar that we did with Keith, you can find it on our Facebook page. You can also find it on our YouTube channel. And then we had Jane Wabbs. Jane Wabbs phenomenal. I got great feedback from some of your emails about the information that Jane provided. Jane's information is there. And she has knowledge in all sorts of areas. The thing that I really liked about Jane is that she is a licensed CPA, not practicing, I believe now, but came from that world. So she really understands taxation and more importantly, understands long-term taxation because, some CPAs are just thinking about what's the taxation you're incurring this year. Jane really looks at it more airplane view it. How do you eliminate taxation over the course of your career? And that's what kind of brought her into becoming a note investor. And so much so that she buys pools of notes now with self-directed IRA funds. So she understands the value in buying notes for one, because it's passive. She has a little bit different of a strategy where me and Keith, we more create notes. Doesn't make it good, bad, or otherwise. It's just the thing that we prefer. But Jane and Paper Profits, they're buying pools of notes. So banks often will be selling off performing and non-performing notes to just get them off of their books for a variety of reasons. And they're typically buying these notes at discounts. And they're doing a lot of due diligence on these notes. So if you are interested in looking back at that presentation, that's also on our Facebook page and also on our YouTube page. She did a phenomenal job kind of walking through the step-by-step process they have in the due diligence that they perform on these notes, the things that they look for, the fact that they verify note terms, they verify borrower information, they look up if the borrower had previous bankruptcies or recent bankruptcies. They look to make sure, the chain of title and any existing liens. That's important if you're buying pools of notes. And when you're buying notes to that extent, when you're buying lots of notes, she talked a lot about, using a servicing company or using a servicer and how that would look when you use your self-directed IRA to do that. So we talked a lot about notes. I personally love notes. Most of our clients invest in notes. So we had really good speak with Keith and Jane on the horn. So we want to thank them for participating us with May. So looking forward to June, what do we got coming up for June? Another star-studded list of guest speakers and great content. And I will tell you, we are booked all the way to August. So we got a lot of good education that's coming your way. And I just want to point out a couple of the ones that are coming up here. My good friend, I just recently got to know Ed Pugh in Charlotte, North Carolina. Had a good time going up there and visiting and taking a look at the Charlotte market and meeting with Ed. Ed is one of the moderators for the largest Facebook real estate investor group in Charlotte, about 13,000 members, if I'm not mistaken. Very well tied into the Charlotte market, very knowledgeable investor. And when I was up there, I got to witness and watch him give his own class to his own students. And they were talking about some horror stories. And through watching that, I thought, what a great way to get him involved and talk about real estate horror stories and how to avoid them. Because I've got some horror stories, not so much of my own, but of clients that also have to do with real estate in IRAs. And there's different ways that you can solve these problems. So we're going to kick it off real strong in June with real estate horror stories and how to avoid them, how to fix them. And my special guest is going to be Ed Pugh out of Charlotte. The next week, June 9th, I'm going to be doing a class on my own, but I love this. This is one of my favorite topics. It's debt leveraged IRA investments and how that might affect taxation. I call it you bet. What is the tax implication for your IRA borrowing money? And does it make sense to borrow money to buy real estate with your self-directed IRA? And not only that, what are some ways to, if you are looking at a tax when your IRA borrows money, is how you can minimize that tax or eliminate it completely. So people always have this, question posed to me is, well, what about UBIT? What about unrelated debt finance income tax if your IRA borrows money? It's not something to be scared of. It's just something to be aware of, but there are strategies and solutions to every problem. So I'm going to go over the pros and cons of debt leveraging your IRA by borrowing money to buy real estate. So that'll be June 9th at 1 p.m. Moving forward into the last half of the month, we're going to talk about self-storage. We got a special guest, Fernando Angelucci, who's a well-known national educator when it comes to self-storage. So real thankful to have him on the show. That'll be June 16th at 1 p.m. And then we're going to keep it with the theme of passive, and we're going to end it off on that and talk about how to be passive and profitable with Charles Sells, June 23rd at 1 p.m. So big list of speakers, and I can't wait to release July as well. We've got an equally star-studded class of speakers and investors in July. So as I wrap up, I just want to remind people, why do we talk about this stuff so much? It's because an IRA gives you the ability to grow tax-free wealth. And if you look at the average American family, what they have in a retirement account when they retire, it's shockingly low. $65,000 is what the average American family has in a retirement account by the time they retire. So this education is not an attempt to sell you anything. Obviously, our product is self-directed IRAs, but what we're really doing is just providing good education to give anybody, NuView clients or non-NuView clients, the opportunity to save for a better retirement, retire early, retire stronger, and pass on more generational wealth by understanding the power in an IRA or an HSA or an ESA and what those can be invested in and what types of investment strategies people are using today to help maximize return, but do it in a safe way while eliminating taxes. I love this quote. I'm going to keep throwing it out there because I think it's powerful. And this was taken actually from not necessarily a quote. These are actually statements made in a Forbes article back in March of 2020. And this was based on a study done by the IRS when they're looking at these self-directed IRAs and how the IRS is becoming more keen to self-directed IRAs, I would say. And the reason why they're becoming more keen to them is before they were kind of one of these just niche products that were off the radar for most people. 98% of American retirement is invested in the stock market, stocks, bonds, mutual funds, CDs. Yep. Most people have $65,000 in their retirement account when they retire. So it seems like, based on these statements, that the rich and the wealthy have already figured out that you can't just become a millionaire investing in the stock market. Because when they look at IRAs as a whole, only 2% of IRAs hold alternative assets, like the assets we've been talking about here on this program. But when you look at the IRAs that are valued above $5 million, all the IRAs valued above $5 million, 25%, a fourth of the assets held in those accounts are alternative assets. So again, let me repeat, 2% of IRAs hold alternative assets, but 25% of the $5 million IRAs assets are alternative assets. The rich and the wealthy have already become keen to this. So this is why we're so passionate about this. And this is why we think that everybody should have this information. Again, whether you're a client or not, power is in education. And we want to just provide the best education and give you guys the resources to start your own self-directed IRA investing. So, and this goes for clients or non-clients. Again, I always remind people, do you have all the accounts that you need to get established? If not, we make it pretty easy at NuView. Call this nicer NuView. Who made this? Maggie? Maggie did, right? Maggie's right here next to me. You can't see her, but she made it. So, and what this is, there's other self-directed IRA companies out there. Realize that the self-directed IRA, the product's the same. Right? A self-directed IRA here is no different than a self-directed IRA somewhere else. The only difference is, what the company will allow you to hold. And I kind of mentioned, we allow you to hold not only traditional assets, but non-traditional assets and Bitcoin. We hold it all. But we also provide great service. And I would probably say the greatest value. I know I'm biased because I work at NuView, but when you look at the fees it costs to actually establish an IRA here at NuView and purchase assets here in NuView, it's really advantageous to those of you who are not looking to get feed to death by your custodian. So right now we actually have a promo that is waiving the application fee for any NuView account you want to open. So if you want to open a Roth IRA for yourself, a Roth IRA for your spouse, a SEP IRA because you're self-employed, an ESA or two ESAs for your children, and an HSA, you could save up to $450, $500. It's unlimited, but it's normally $50 per account to set up. Until the end of May, we are offering applications to be opened with no application fee whatsoever. So it doesn't cost you a thing to get these things set up. And then once you move money over and you start investing, our asset purchase fees are between 50 and 95 bucks. Crazy, crazy low, depending on, what you're doing. And that's just a one-time fee. And then when you go to our administration fee options, again, the fee for maintaining the account, either, quarterly or annually, if you look at the overall, we're about 20% less on our annual fees than our average competitor. And it gets even higher when you talk about large dollar accounts above 750,000. So great value in having an account here at NuView. And we're not a new kid on the block. We've been doing this for 17 plus years. So we are a leader in the industry. We were voted top 5 self-directed IRA companies in America for 2020. And we hope to be the very, very top of the list. But we currently are sitting right there, top 5, can't complain on that. So great value, great service that you get here at NuView at a great price. And even better, like I mentioned, if you want to open an account, any amount of accounts, whether you're a client or not, we'll do it with no application cost. All you have to do is email info@nuviewtrust.com. Say, I want my free account. Give us your phone number so we know who to call. And we will call you immediately and get you set up or answer any questions that you might have before you get that set up. So again, thank you guys. I'm going to see if there is any questions here. I want to circle back and thank Becky as well. She has her information in there. And it doesn't look like we have many questions. So I must have done a really good job presenting because they're just like experts now. Right, Maggie?
Right.
Right. If you guys do have questions, even after this presentation, though, what you could do is type them into the chat box. We monitor it, even in the comment box on Facebook, or again, use that email info@nuviewtrustcompany.com. I got one question. How do I set up a trading account? Just give us a call. Well, we can set that up for you. Email us at info@nuviewtrust.com. And I can have one of my sales associates reach out to you. We can get you set up with a self-directed IRA and tell you how you can set up the trading account. And I will tell you, I will remind people, we are offering a trading platform for crypto. We will have it probably, knock on wood, operational by next week. Okay, don't hold me to that, but it's going to be probably within the next week or so. We're at the very tail end. We've got the purchase packet made. We've got the fee schedule established. So if you current clients too, if you want to take a little bit of money, that's sitting there idle in cash, and you want to invest it in crypto, since it is down, if you want to take a crack at the upswing, is you can set up an account here at NuView that will allow you to do that as well. And it doesn't require you to set up a checkbook control LLC or pay, $1,100 to do that. So we're going to be set up directly with a platform that allows you to trade directly from your NuView account. Great stuff. Another question, can we invest in foreign real estate assets through your self-directed IRA? Yes, the answer is yes. I was just on a presentation yesterday with ECI Development. So special thanks to them. They put on a great presentation the other day, their offshore symposium talking about offshore investments. And yes, your IRAs or self-directed IRAs can invest in property, both domestic and international. So there's no restriction as to where you buy your property. So great questions. Appreciate the feedback. And I am right on time, Maggie. 1:59, 2 o'clock. I actually made it under the timeline. They give me a hard time because I always go over. You can't see the people laughing at me, but they are. But I just have fun doing this stuff, guys. So I hope this was helpful to you guys to kind of recap what we did in May. Keep an eye out. We're going to continue with the hot streak. We are the #1 rated education platform for self-directed IRAs. So very exciting stuff, and we're just getting started. So see you guys next Wednesday. Have a good one.